Every week, I analyze dozens of stocks and most of them are discarded. Payoneer though got my attention because of its business, its growth potential and its valuation. And in this video, I'm going to explain you why Payoneer may be a good investment idea with a very interesting upside. But first, what do they do? Payoneer was founded in 2005 and it's a multi-currency financial operating system for small and medium businesses. They are present in 190 countries and operate in 150 currencies. What Payoneer does is to allow people to do all their cross-border transactions in a simple way, no matter where they are located. So, for example, let's say you are a freelancer from Brazil who just did a job for a client in the US through Fiverr. How do you get paid? Because Fiverr won't just make a deposit in your personal account in Brazil. This means you need a way to get paid, which is exactly what Payoneer offers. So when you sign up to Payoneer, you instantly get a US bank account, and it's through this account that you will get your money. And then if you want to, you can send it to your home country. Investing in Payoneer is a way of surfing the e-commerce trend, which is growing enormously, and it's also a bet on globalization and emerging markets. After all, Payoneer has more than 4 million users all over the world, exporting goods and services to all continents through channels like Fiverr, Envato, Patreon, Airbnb, Udemy, Walmart, eBay, Amazon, among other names. Their IPO happened in October 2020, but since then, their stock has been on a continuous downtrend, as you can see here. Since its first trading day, Payoneer stock is already 50% down, but the thing is that the company is much better now than it was back then. Revenues have been growing tremendously, as you can see here, at 28% per year, right, on average, which is a lot, while margins have been expanding, as we can see here. Gross margin went from 70% to 85%. They are now a profitable company. They also have been generating cash consistently, with the operating cash flow margin expanding from 3% to almost 20% now. And this happens because this is a very scalable business. So the more revenues grow, the more the bottom line expands. They also have been generating free cash flow in the last 2 years as the business matures, and I think this trend will continue. So I really like what I see here. Besides, you can say it's a company with skin in the game, as all executive officers and directors as a group own 5.6% of the company, which can be considered a good portion. The company has also been buying back its own shares, as we can see here. In 2023, Payoneer bought $57 million of its own shares, and let's remember that Payoneer is a $1.8 billion market cap company, so $57 million corresponds to around 3.2% of the current market cap. And even so, the authorized amount of repurchases was increased to $250 million. And this is good for stock owners because their participation in the company grows as there are less shares. It also may indicate that the company believes its own stock is cheap. But is it really? Is Payoneer's stock undervalued? Is it cheap? Well, I believe so, and that's what I will show you now. But first, if you are enjoying this video, please leave your like and consider subscribing. But okay, let's evaluate this stock. Oh, and this is not investment advice. So as I said, they've been growing at 27.7% per year on average. And this is their guidance. So what are they telling us here? They are telling us that until 2026, they will probably grow around mid-teens, like 13%. And that after 2026, we may see a 20% per year revenue growth. So for our projection, let's use 8%. Only 8%? Yes, let's keep the bar low. After all, we want to buy good businesses trading at low valuations and thus at low expectations. They are also telling us that until 2026, their adjusted EBITDA margin will stay at around 25%, and that after 2026, we may see a bigger margin, bigger than 25%. Now, let's come back to our Excel sheet. In 2023, Payoneer delivered a 19.2% operating cash flow margin. And I know this is not the adjusted EBITDA margin, but after all, EBITDA is a proxy of cash generation. So let's say that for the next 8 years, Payoneer's operating cash flow margin stays at 15%, right? Which is less than what they've delivered last year, right? In 2023. Now, they've been delivering a 68% free cash flow conversion rate in the last 2 years, right? So let's use in our projection a premise of 60%. And let's remember that as the business matures, I think the free cash flow conversion rate will increase, not decrease. But anyway, so these premises would lead us to a fair price of $5.18, which represents a 4.5% upside from where the stock is trading now. And I know this is not exciting, but you need to remember that we used quite pessimistic premises here. So my conclusion is the following, and again, this is not investment advice, but it seems that if I bought Payoneer stock now, I would be buying a very good business, trading at a very reasonable valuation, at very reasonable expectations, because in the end I think they can deliver much better results than what I've projected, right? So let's say that they managed to deliver a 13% annual growth rate, right, for the next 8 years instead of only 8%. After all, as they show us here, they are in front of a big market of $6 trillion in which there's a lot of market share to gain still. So considering this, I don't think I am out of my mind projecting a 13% annual growth rate, right? And let's say their operating cash flow margin expands annually by 3%, right? Which is, again, not a crazy assumption. Well, considering these new premises, I think it's fair to say that the fair price for Payoneer stock should be $7.43, which would represent a 50% upside, which is not bad at all. And there are people out there with an even higher price target for Payoneer stock. As we can see here on Nasdaq, Bittenberg initiates coverage of Payoneer Global with buy recommendation. The average one-year price target for Payoneer Global is $8.61, and the forecasts range from a low of $7.07 to a high of $10.50. And these price targets are in fact achievable if the company delivers good results. Well, anyway, is Payoneer stock cheap? Well, personally, for me, I think it's cheap. And I have to remember this again, this is not investment advice, right? But it all depends on what you think that is going to happen with the business. And that's why I'm leaving this Excel sheet in this video's description so you can play with the numbers and evaluate yourself this company. Well, for now, I'm keeping Payoneer stock on my watch list. That's it for today. See you next time.